Welcome back. The company which is on our radar right now is RITES. In the last fortnight, the company has won a slew of orders. The latest one was on 17th of February when the company won EPC orders worth 76 crore rupees from North Central Railway. Prior to that, on 11th of February, the company won a 65 crore order from the Ministry of Railways again for Manesar. Before that, 11th of February, it was a Rajasthan order, 148 crore. And at the beginning of the month, they had formed a joint venture in Israel. The revenue momentum of the company up until now has been a bit muted. In fact, in Q3, the company's revenues were down 12.5%. But is the tide turning? Because we've seen a lot of order inflows. Rahul Mithal, the chairman and MD of RITES, is now joining us on the show now. Rahul, afternoon. Can you tell us, in the month of January and up until February 21st, what has been the total quantum of order inflows, and does it mark a pickup, or is this in line with what we typically see?
Good afternoon. You see, the trend of orders has been continuously coming in the last few quarters itself. Quarter 3 itself, we got 65 orders totaling to about 1,200 crores. Our order book on 31st December was 5,500 crores, which was 10% higher than 30th September. And this trend has continued in the last month or so in January and February. We are tapping all the sectors. Our key strength is that we do consultancy across all the sectors of infra. So you see the wide range, whether it is rail infra, metros, Jal Jeevan Mission. So we are getting orders across these, and moving forward, I expect this trend to continue.
Mr. Mithal, when you say you expect the trend to continue on a quarterly basis, what kind of order win run rate are you looking at? What do you think you'll end this year in terms of order book? And when you say you are seeing demand across segments, what kind of FY24 outlook can you give us?
You see, these are very exciting times for us, considering the high capex grant in the budget. 10 lakh crores is one of the highest ever. 5.5 is highway and railways. 1.1 lakh crores is urban infra, which includes city planning, metros, smart cities. These are all our core strength. We have 9 different verticals, and as I mentioned, we have been getting orders across sectors. In fact, if you
what I wanted to
9
understand is... Yes, Mr. Mithal, what I wanted to understand is, since you have some visibility in terms of order flows, right? Since you're talking about this big capex wave as well, considering what you've seen in February so far, what kind of order book or order inflow do you expect by end of this year? And how much can you execute? How much of them will be executable, say, in next 6 to 8 months?
You see, the order book trend has been 2,400 crores orders in 9 months, vis-a-vis 1,600 crores in the previous 9 months. And I said this trend has been continuing in the last month or so. So I expect this trend to continue. However, we have 2 different streams of revenue. We are primarily a consultancy company, and we do turnkey to about 25%. So the order book execution varies for a turnkey contract, which is anything from 3 to 4 years, and a consultancy contract, which could be short-term consultancy as well as long-term consultancy.
Got it. What's your current order book?
Our current order book as of 31st December...
We got that, 5,500. Can you tell us, post these recent order wins, what would that number be?
So we declare the order book as a composite on a quarterly basis, and only certain orders which are above a certain value, we declare them to the stock exchanges when they come.
Okay. Any L1 pipeline that you could share?
We would not like to speculate on L1s. When we get confirmed orders above a certain value, we declare them to the stock exchanges.
All right. So one of the interesting updates that you have told the exchanges is your JV in Israel. It is for Metro Management Group Limited. That's what the JV is called. Can you tell us how big of an opportunity is it? What is your share here? What kind of investment will you be making? Will it start execution this year itself? Some timelines and the amount here as well.
You see, this is an Israeli metro consultancy contract, which we have formed a tripartite JV with DMRC and Israeli firm. Right now, we have been shortlisted in the RFP. As and when the details of the orders, and in case we win it, we will inform you the details. But right now, these are early days.
So it's just a joint venture, and you've not actually won this order, is what you're saying?
Correct, very correct.
So you're awaiting finalization of this particular project win.
We have just been shortlisted in the RFP
Okay.
along with various other consortiums.
Got it.
Okay. Sir, your order wins in 9-month FY23 is significantly higher than this comparable period of last year, 2,400 crore versus 1,600 crore. But your revenue execution has been lagging. In Q3 and in Q2, your revenues declined on a year-on-year basis by more than 10%. Could you explain what's happening on the turnover front?
You see, we have 4 broad streams of revenue, and export revenue is one of the 4. And the dip in the revenue has primarily been because of the drop in export of rolling stock. And this was because of the 2 orders we had pre-COVID, and these were all completing their, their finality. They were reaching their finality. So that was the reason why the total top line has dipped on year if you compare year on year. However, we made up with increase in the consultancy revenue as well increase in other streams of revenue. So if you compare our consultancy revenue year on year, that has gone up by 16%. Our leasing revenue has gone up by 10%. Our turnkey revenue, which is the third stream of revenue, has gone up by 115% revenue. So even though the top line has gone down because of dip in one stream of revenue, our core EBITDA margin, which is our main focus, has gone up from 23% to 26%.
Okay. And is there any pickup or recovery in exports? And how much lower is it?
See, the export order book, which remains out of 5,500 crores, is only 100 crores as of now, which is definitely going to get completed during this quarter itself. Post-COVID, we are engaging with a number of prospective clients, both in Southeast Asian countries, African countries. And our aim is to fill up this gap of 2-3 years when we didn't get any fresh export of rolling stock orders. And I'm sure in the coming months, we should be able to convert it into a finite order. The trend has already started. We've got a small order, about 10 crores for 2 locomotives to Bangladesh. So that shows that the trend has started. I'm sure we're going to get some finite export of rolling stock orders in the coming months.
All right, Mr. Mithal, it was a pleasure speaking with you. We'll speak to you very soon again when there are more developments as far as the order wins and the export markets are concerned. So that's the word coming in from RITES, saying that yes, the demand has picked up and they are looking at more order wins as well. Slip into a short break. On the other side, Arvind Subramanian, who is the MD and CEO of Mahindra Life Spaces, will be with us to discuss the business outlook. Stay tuned for that.